Yo, what's up guys? Today's 26th of November. I took a trade today that ended up stopping out at break even. So I didn't make money, but I also didn't lose money. So let's get into how I took this trade and what my reasoning was for taking this trade. So first things first, we start on the high time frame. Looking at the 4-hour chart, this is where market was about to open, and look how close we are to this buy side liquidity and this buy side liquidity. We have started this bullish uptrend towards the upside, and now we are inches away from reaching its target. So I have a very good feeling that once market opens, we're gonna take this buy side liquidity, and if we're gonna take this buy side liquidity, we're also gonna take this buy side liquidity because they are so close together. Now jumping into the 15-minute time frame, just before market open, I noticed something really crucial. We just hit the equilibrium of this range over here, from here to here, and then we just hit the equilibrium. We displaced up, but just before market open, guess what? We have not taken this target of the equilibrium yet. So that means I could use that going into market open. If price does not take this high before market open, that means I could jump into a long position, target the external highs, put our stop loss below the SMT, and as soon as price takes this high, we put our stop loss to break even. That way, when price comes back down, we get stopped out without losing any money. But in case it doesn't come back down and it keeps rallying higher and higher, we have potential for crazy upside. And this kind of trade setup where just before market open, there is an equilibrium in effect that has not reached this target yet, there's a very nice opportunity for you to take a long before this target is taken. And then as soon as it's taken, we just put our stop loss to break even, and we don't have to worry about anything. We can just let price do whatever it wants because we no longer have risk, right? But why? Why am I putting so much emphasis on this high? Is because every time price takes a high, it has a potential to reverse back down, but it also has the potential to break out and just shoot up so aggressively. And if we can catch that aggressive move up, we can make so much money. But that doesn't happen all the time. So if it comes back down, then worst case scenario, we don't lose any money, right? So it's honestly a win-win. Like, worst case scenario, you don't lose money, but best case scenario, you make like thousands and thousands. So this was my game plan going into the day. So let's take a look at the trades I actually took down on the 1 minute and 15-second time frame. Now this is the 1 minute time frame, and this is 9:29, 1 minute away from market open. And we are still inside the same equilibrium, and we haven't taken that high yet, right? But what happens now is there's an SMT and a clean fair value gap. Now this is basically perfect. I do not even need to look at anything else because I could just take along on this fair value gap, put my stop loss below the SMT, and I target the same 4-hour highs, right? They are up there, boom. At first glance, this looks very unrealistic. It's a 6-to-1 risk to reward ratio, and the stop loss is very small and the target is very high. But this is when we go back into that logic where if we break above this and we come back down, then because we put our stop loss to break even, we do not lose any money. But if price just so happens to break above this and then it starts like rallying like crazy and taking all of these highs all at once, then because our risk to reward ratio is so good, this is so much money, you know what I'm saying? So in my case, I risked $750 per trade. So if I risk $750 here, so we take a long here, but then as soon as this high is taken, we put our stop loss to break even, right? So that our stop loss is now at break even. I no longer risk $750. Now I risk $0. So it's a free trade. So it really doesn't matter if it comes back down because the potential is that we have a chance to make $4,300. And these buy side levels, I did not just pick them randomly by closing my eyes. No. The reason we picked these in the first place is because they are so close to being hit. So they are very realistic targets on the 4-hour chart. So just because it looks far away on the 1 minute doesn't mean it's not possible to be hit on the 1 minute, because it is possible to be hit on the higher time frame. So anyway, I took that trade, right? I entered on the fair value gap here, stop here, target the 4-hour highs. And then guess what? As I expected, we immediately take the equilibrium high. Now, because I'm following my rules, as soon as this high is taken, I immediately put my stop loss from minus $750 to $0. Boom, right here. So inevitably, I get stopped out over here. But, you know, if we didn't get stopped out, then I mean, we could have made $4,000 just like that. And later on in the day, we do take those levels, as you can see right there. So that's the trade I took today. I feel great because I get to test my strategy and see how it works, get real-time feedback, try to learn what I did right, try to learn what I did wrong. And honestly, I just love trading, so I don't even mind not making any money. I'm just glad I didn't lose any money. So yeah, that's been my day. See y'all later. Peace.